What's going on, everyone, and welcome back to Explain the Charts. Today is November 16th, 2025, and we are diving deep into Litecoin, or LTCUSD, which has been making some serious waves in the crypto market recently. There is a ton of exciting news surrounding Litecoin that we need to cover, from major institutional adoption to surging ETF interest, all of which seems to be fueling its latest rally. First, let's talk about the exchange-traded funds, because this is a huge story. The new Canary Litecoin Spot ETF has seen impressive inflows, recently pulling in over $2 million in a single day, bringing its total assets to over $6 million. What makes this so significant is that it's happening while Bitcoin and Ethereum ETFs have actually seen billions in outflows this month. This signals a potentially pivotal shift in institutional interest specifically towards Litecoin, which is seen as having greater regulatory clarity after being classified as a commodity by the CFTC. Analysts are estimating a 68 to 90% chance of more spot Litecoin ETFs being approved by the end of this year, which could unlock hundreds of millions in new investment. On top of that, we're seeing major corporate adoption. Pharma giant MEI Pharma recently rebranded to Lite Strategy Inc. after completing a staggering $100 million allocation to a Litecoin treasury. They now hold nearly 1% of the entire circulating supply of Litecoin, effectively taking it off the market and reducing the available liquid supply. This is a structurally bullish development that provides a strong fundamental tailwind for the price. The news is buzzing with speculation, with one FX Empire article drawing parallels between Litecoin's current chart setup and Zcash's explosive 685% breakout from a similar pattern. While some influencers are making wild predictions of five-digit prices, more grounded analysis points to a crucial breakout being imminent. Now, let's bring up the charts and see how all of this news translates into the price action. Looking at the daily chart, we can see the long period of consolidation Litecoin has been in for most of 2025, trading in a wide range between the low $80s and the $130s. This aligns perfectly with the news reports of a multi-year symmetrical triangle pattern that has been squeezing the price tighter and tighter. We saw a major shakeout in early August 2025 that took the price down to the low $50s, but it recovered quickly, showing underlying strength from buyers. The real story begins here in early November. After months of sideways action, we see a massive surge in buying pressure, which perfectly correlates with the positive news about ETF inflows and institutional buys. The candle on November 7th shows a massive 17% gain in a single day, which analysts highlighted as a major rebound. This was followed by another huge 14% candle just yesterday, November 15th, on enormous volume, smashing through the psychologically important $100 level. This isn't just a minor rally. This is an impulsive move backed by significant volume and strong fundamental news, suggesting the start of a new major uptrend. The previous cycle high from December 2024, sitting up near $147, now stands as our long-term primary target and a major resistance zone. Let's zoom in on this recent price action to identify our key levels. The recent rally found its launchpad right around the $85 support level, a zone that has been defended multiple times and was highlighted by analysts as critical. The price then blew past the resistance at $95, which should now act as a new floor of support on any potential pullbacks. Currently, the battle is being fought in the $101 to $105 range. This area has acted as resistance 7 times since August, so holding above it is a major sign of strength. Our immediate overhead resistance is the formidable zone between $116 and $119. The news specifically mentions that a daily close above $119 could trigger a massive 30% rally by confirming a bullish inverse head and shoulders pattern. Beyond that, the next major hurdle is the $135 to $140 area, which represents the upper trend line of that multi-year triangle. A clean break of that macro resistance would signal a true trend reversal and could indeed lead to the kind of explosive move seen in other altcoins. Switching over to the 1-hour chart, we can see the anatomy of yesterday's breakout in more detail. The move from the $97 level up to nearly $110 was incredibly fast and powerful, occurring over just a few hours. Since hitting that local top, the price has been in a healthy consolidation, pulling back and building a base of support right around the $101 to $102 level. This is a classic bull flag formation on the lower time frames. Bulls are showing that they are willing to defend these new, higher prices. For shorter-term traders, the key is to watch for a continuation breakout above the recent high around $109.70. Conversely, a drop below the $101 support level could signal a deeper pullback is needed before the next leg up. Now let's drill down to the 15-minute chart for a micro view of the last 24 hours. Here we can see the battle for control playing out candle by candle. After the initial surge to $109.70, we saw a sharp rejection, followed by a bounce off the $101.30 area. The price is now coiling in a tight range, generally between $101 and $104. Volume has tapered off since the initial impulse, which is typical during a consolidation phase. Day traders should be watching for a high-volume break of this range. A move above $104 could signal a retest of the highs, while a break below $101 could see a quick drop to the next support level around $99. So, to recap everything, let's go back to the daily chart and outline what to look for. Our key support levels are, in order of importance, the psychological $100 mark, the old resistance at $95, and the major rally point at $85. Our key resistance levels to break are the current zone around $105, the critical breakout trigger at $119, and the macro targets of $135 and the previous high of $147. Now for some unbiased predictions. The bullish scenario seems most likely right now, and I'd give it a 65% probability. The combination of strong fundamental news, clear institutional demand, and the powerful technical breakout above $100 is a potent mix. This scenario is reinforced if we see a decisive close above $119, targeting $135 and potentially higher. The bearish scenario has a 25% probability. This would involve a failure to break the $105 to $110 resistance, followed by a break below the $100 support. Negative market news, such as an unexpected ETF rejection or a broader crypto market downturn, would increase the likelihood of this scenario, targeting a retest of $95 or even $85. Finally, there's a 10% chance we simply chop sideways between $100 and $110 for an extended period, waiting for the next major catalyst. Keep a close eye on those spot ETF decisions and any announcements of further corporate treasury allocations, as these will likely dictate the next major move. That's all for today's analysis on Explain the Charts. Remember to like and subscribe for more in-depth chart breakdowns. As a final reminder, this video is for informational purposes only and is not financial advice. Trading and investing in cryptocurrencies involve significant risk, and you should always do your own research before making any decisions. Thanks for watching, and we'll see you in the next one.